Yo, what's up guys? In this video, I'm going to be giving you the actual fundamental blueprint that you need to generate profitable trades. I know a lot of people out there are trading support and resistance, ICT, or all this stuff, but my biggest issue, especially with this ICT stuff, is people say, oh, if the candle wicks upwards and does this and does that. No, bro, listen, there's a reason why the candles are being printed and you need to understand that. And the reason why these candles are being printed on the charts is because there are economical events happening across the world, right? So here you guys can see forexfactory.com, right? And when you go on Forex Factory, you're gonna notice something across every single data release. There's 3 things across every single data release, and it's an actual, a forecast, and a previous. So the most important thing to us when we're actually creating these candles are these 3 things. It's going to be previously, how this came out. The forecast is what they're expecting for this current time, and then the actual data, right? So when the candles are being printed before the data is released, what they are doing is they're pricing in the forecast. And that's why you're going to see, okay, sometimes you'll have news that's supposed to be bearish for GBP, and then you'll notice that GBP is resting in a great little supply zone, right? Things like that. So it's about being able to identify where the markets are actually headed. I'm going to show you guys a couple examples of how I actually use this within my day-to-day trading to generate profits consistently. This week, I took a couple trades, and as everyone can see here, this is GBP AUD. I called this on live stream in front of everyone. So if you guys don't already, make sure you subscribe to the channel and hit the little bell so you're always notified when I go on live stream. These are completely free. Let's get back to this video. So here, I'm gonna just simply filter this by GBP news. Then I'm gonna go to this last 2 weeks actually. This was on Friday. We have Great British Pound GDP news, which came out at negative 0.1%. So when it came to me actually trading, I hopped on my chart and I checked, okay, where are we? So you guys can see here, the news was released right at this 2 a.m. candle. But what I had noticed is overall, from a macroeconomical standpoint, how do we look? Like from a technical standpoint on the higher time frames, on a bigger picture, how does this chart actually look? Well, I see we've been trending downwards very aggressively. So now it was as simple as let's find confluences to play in our favor. So here you guys can see, we have this. I go down to my minute 5 and I have obviously all of this going on. 2 a.m. gets released and you guys can see this is exactly what I wanted to happen. And if you guys watch more of my latest videos, you're gonna notice that I keep talking about this exact pattern. And it's this 3-touch minimum on a trend line. So you have over here, everyone can see, you have 1 touch and separation, 2 touch and separation, 3 touch and separation, and then you have a 4th touch and a fake out, right? So this is after the news is released. You have a touch, a fake out, and then a break under this. So there's 2 things you could have done. You could have waited like me to get this breakout. And then once we got under here and we had a solid closure on the minute 1, as everyone can see right here, I decided, hey, I'm gonna hop in this trade. And then I just tucked my stops above that last high that we had created over here. But in reality, I could have even tightened my stops right above the fake out. Reason being is if we've just broken under this trend line, the news is also showing me that we're going to move bearish. And this I can already identify as a fake out because the way the data was released and also just this being the last area we pushed up into. So if we break above this, this would be now a higher high, meaning that we're bullish. I could have just tucked my stops right there. And it was as simple as just finding a liquidity area on the charts to target. So you guys can see we had this massive drop over here. There's all these equal lows over here. I personally closed out at this level over here where we, created these little equal lows. And that's a nice 1 to 3 risk to reward ratio. But it was as simple as finding just any fundamental buys. So if I look at this change in the total value of goods and services being produced by the economy. So if the change in the total value of everything is decreasing, then that's going to mean that things are cheaper. So your economy is actually somewhat succeeding because right now we're in a standpoint where inflation has to be cutting back. If the Great British Pound news comes out negative, plus my technical confluences show that it's going to be, moving bearishly, then I have no hesitation getting in this trade. And I'm actually able to risk more because I have that fundamental bias. So I'm following every single step of following the data, which is the news, to follow the candle, to then follow the money. So I'm going to show you guys another example that I caught literally right before this on the dollar, right? So it was a GU sell that I took. And this one I actually entered after the news was released. So different examples, tons of gems to learn from. Here you have GU. It's literally the same setup printing over and over again. So if I look at GBP USD, right, this is the actual thing that I was looking at. Unemployment claims. So think about it like this. If less people are claiming unemployment, then more people are employed. So if more people are employed, what happens to the economy? People are getting more money, so they're spending more money. So this could kind of be seen as something that's inflationary. If people are going to spend more money in your economy is going to increase, therefore making your currency increase. So if the forecast, right, which was 224K, they were expecting more people to claim unemployment, which would have been bearish news for the dollar. giving us an overall bullish GBP. So that's why you guys can see we kind of have this run over here, and then this news gets released at 8:30 a.m. So what happens at 8:30 a.m.? You guys can see this big candle over here goes bearish in the direction that it should. But I waited because overall, this is still very low. Now I have to look from a very financial standpoint of, if I'm a bank putting in billions of dollars, I want the best price. And I decided to wait on this setup. And you guys can see this ends up pulling all the way up. And then what did it do? It gave me that little 3-touch pattern. And you guys can see here on this, I had a 3-touch pattern, but no break. That's why I wasn't ready to get in. But over here, I get this big push towards the upside. And you guys can see touch and separation, touch and separation, touch and separation, and essentially a fake out right here and then break under. Now, I wasn't even active on the charts at this point, but I was still able to identify something. I had another news release coming up of Jerome Powell speaking, which, as we know, Jerome Powell is literally like this guy. When he speaks, if he just coughs, the market shifts sideways and do all this stuff. So already I was believing with this happening, we're going to see a big push in the market. If I just had unemployment claims get released, and I understand Jerome Powell is going to speak this day, what's one of the things he's probably going to speak on? Unemployment claims. So I'm already in my head believing, okay, he's most likely going to speak on this, which is going to generate that liquidity in the markets that I need. It's going to be able to push these markets further. That same pattern, you guys see that 3 drive, break, and then he speaks around this area over here. You guys can see the market's literally tanked. And so I actually got in, I don't know why it's a little moved, but I got in off the continuation over here. So my actual entry was off of this level here, right? And I was just like, I was essentially thinking it was about an hour 45 before. Yeah, so right there. So right when we printed this new lower low right here, and I just took my stops above this previous high over here. I was like, hey, there's no reason why we should break above the level that broke us out of this trend line. And then I had all of this to target, right? So now I'm looking from a macro standpoint on my higher time frames, and I'm trying to identify some sort of level. So I understand the weight of Jerome Powell's word is very, very strong. So I was actually able to target the lows of this over here. Now I know a lot of people are going to be in here, oh, your risk to reward isn't that high. But at the end of the day, I'm actually following the data, which is why I don't even care about my risk to reward, because I understand my win rate is going to be substantially better. So you guys can see Jerome Powell speaks and these markets literally tank. I mean, this drops after he speaks immediately. This drops 43 pips, and then overall this continues to play out 90 pips. So it's literally as simple as identifying these macroeconomical trends with the fundamental data, right? So, and then once you have that fundamental data, literally anything works. Like I used to be so strict on order blocks, refining my order blocks, finding fair value gaps. But nowadays it's as simple as 3 touches on a trend line with the fundamental buys, and then I'm literally ready to let whatever trade. So if you guys enjoyed this video, make sure to like, comment, and subscribe, because this is the one place where you'll see real trading, right? You actually see fundamental biases behind those orders versus these gurus who literally don't even know what they're talking about. So I appreciate every single one of you guys, and I'll see you in the next video.